Well, good day, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for the weekend, May 3rd, 2024. Well, we've been looking for a break in the market in terms of weakness in the job sector. We got it. We have been looking to see if the service sector would get a drop. We got it. So let's take a look at those numbers before we go too far. And let me get you into the right spot here. Here we go. The non-farm payrolls came in at 175,000 versus 240. Now, for those of you that get my newsletter, you know that I gave two examples today besides the 240, which is what Mark was looking for. I picked 175 and the 300,000 number. And this gave you the weakness. Bingo. And when you dropped, what you did is you took, well, let's start here. The unemployment rate went up a 10, just what the Fed is looking for. So they're getting that. I'm disturbed with the gray areas. You always look into the data, like Apple. I know Apple went up big, but for all the wrong reasons, because they're buying back a lot of stock, and I guess your stock will be worth more in theory because they're buying 110 billion of their stock back. But when you dive into the numbers, there's not growth, and that becomes a problem. But in the interim, I'm looking at the payroll sectors here, and I'm seeing, wow, that dropped 70,000, but government dropped 90%, went from 71,000 to 8,000 new hires. I'm looking for adjustments. Now, I don't want to be a bear, so don't put that into your brain or in my words. But I think you're going to get an adjustment up. How much doesn't matter. Even if it's near the 200,000 level, it's weakening. Let's give it credit for that. And then when you come to the service sector, this was the problem. We kept seeing hiring in this. Well, now you got contraction. 49.4. Anything under 50 is contraction. And if you look at the employment, it's 45.9. It keeps slipping away. Prices paid are up for the sector, but new orders, it's a little slippage here. The service sector in a bit of problem. This is the report that the people were applauding, and you'll see that they went to if you look at the CME Fed Watch page, September's back in play. Now, I need, as I've said to you repeatedly, 3 reports, at least 2 of the 3 trending to the downside. If I can get that, and even if the third's a slight adjustment, I'm comfortable. So that the Fed then probably does begin some type of cut this year. We'll see. I saw some people putting probability in November. So right at the election, the Fed's going to make their first cut. I don't think they're going to do that, all right? It stinks if they do that. They may say they're independent, but they'll be criticized like mad. Oh, you're helping Biden at that time? That's exactly what would be said by people. So it's probably either the September or December if a cut's going to happen. And the stock market responded accordingly. It jumped pretty darn big, all right? So you saw that. Nvidia's up another $30 if we take a look at what it's doing. If you take a look, most of the screen here, other than the dollar and the gold market, in the red, right? KREF, all right, and silver market. So the metal markets were a bit weaker. JP Morgan down. The banks, if interest rates are going to fall, is that really good for the banks? Probably not. So I'd be a little bit careful here. And I know some of the bank ETFs went up. I don't trust it, all right? I want nothing to do with commercial real estate, that's for certain. And we will see if this gives some relief. Why? Well, the 5-year, let's go to the 10-year. The 10-year note did get up to about 5% this week, but it finished at 4.5%. That is nice, all right? That helps everybody. It hurts the bank's earnings down the road, though. I think it's time you take another look and we get ready for Home Depot. A lot of these high interest rates have put people off. Not everybody's going to buy a new home, and if rates fall enough, what happens? In addition, I don't want to jump on a market right now that's already had the move because of this. So this has been a correction that has taken place finally. You can see how the market was going up literally from November all the way up. And over the past 5-6 weeks, we've had the correction set in. The market is likely to hold the 100-week average of closes in gray and the 200, 315 to 314. You got to 326. Where's the Bollinger Band? That's what it's holding. So it's between here and there. I don't see a trend yet. If the market rallies, the resistance around 360, I can see it arguing a play there, but I can make an argument for a return in this market if we see things slow down, if people don't get laid off in big swaths, if unemployment doesn't explode. I think the Fed will be able to react. Now, at some point, you're going to get numbers like 175,000 in the contraction in some of these key service areas and other things where the Fed will say to itself, we should abandon the data and get ahead of the curve. This was the first eye-opener for them. The numbers came their way, in my opinion. You're oversold when you look at the slow stochastic. eBay. All I was ever looking for was the market to get up here and have trouble at the 100-day and the upper band. And it most certainly has set in. If you can lose the embedded reading, I think you'll get back to 47.22. And then we can take another look to see if the market restructures itself from that area. KRE. So on the weekly chart, this threw out a buy signal. It has an outside week up. Outside weeks are exceptionally important. You get them really often on daily charts. They're often a sign of either a break or a continuation of a pattern. I have a course. It's on our website. I'll talk about it at the end of this. It's under the education area. It's 9 video chapters. It teaches you how to work with it. But at this point, until you take out this week's low of 46.98, what the market has done is it's saying there might be more upside, maybe, and I don't think you'll go much more than 51.69, the 100-week average to the upper Bollinger Band. If you take out this week's low this week or next week, then I think the market gets into more serious trouble and attacks the lower Bollinger Band. I explain how to figure that out and so on in the courses. MSCI, this is China, and as much as China's got its share of problems, it's exploded to the upside. It's overbought, it's over the band, it should have trouble at 45.33, but this is a chart that is not buying what we hear. Their economy's in trouble and so on. It has come alive again, and you pay attention to that. In XLI, the industrial sector. So we had lost the bearish embedded reading, and now you get another outside week. This is so important. That's why I'm going to talk about outside weeks. What it does from here, this week's low is key not to take out. Momentum is saying that the move today is false, that you already lost momentum and it's going to be ahead of price. We'll see which one turns out right. In XLE, when you lose the bullish embedded reading, when the blue and the red are over 80 and then the red turns down first, it's often a sign that the market's going to make a run to the closest main moving average. In this case, it's the 18-week before it goes back over that high. I believe momentum leads price. Price doesn't leave momentum. And it's very subtle, but once it kicks in, you go, darn it, why didn't I pay attention to that? That's why so many people use relative strength, MACDs, stochastics, whatever their cup of tea is, but that's the idea that momentum will lead price most of the time. UUP, where do you think I think we should have trouble? Right here. You're at the upper Bollinger Band. How often do you stay out of the bands? 5% of the time. So this is the area problems should develop. The market had an outside week down. I love outside weeks. They set up certain ideas. Again, I'll talk about that right at the end of this. In the gold market, here too, you lost the bullish embedded reading. So before prices get up over 225.09, I can see price attacking the 18-week average or making a run in that direction. And because it's an outside week, you know where the failure number comes in, this week's high. So if I'm wrong and I'm looking for an up, it shouldn't take out the low. If I'm wrong and it's an outside week down, it shouldn't take out the high of that week. And there's ways that you work with that on top of it. Silver's one of the good-looking charts here. It based, Look at how long. It's getting a correction. Let it correct. I'm looking for big support in the 2250 area here on this market. I'm licking my chops already. Longer term, I like this. Lilly, we know it had a big bounce, but this market's been out of its uptrend since back here. And people don't believe me on it. And I know it went up for the week. You were up $1.06. You lost back $60 in this. And I'm telling you, momentum leads price from my point of view. Does everything work all the time? Of course not. Death is probably it. And if you live in the United States, eventually they're going to get you on your taxes. Beyond that, I don't know too much that's all the time. And I still look at this as wanting to hit, and it did it. It hit the 18-week average. You see that, but the momentum's still down. It doesn't have to break down, but I think it's got to play around that 18-week average a little bit. Uber had its run. This is the correction. It was called when this happened. I mean, all you need to do is take a look at when you lost this red line under the 80 level, got under 79. The battleground should be very close to this 18-week in it. Did the company change? No, but you had this phenomenal run from October. Corrections happen. They're either a third to 50% typically. So be aware of that. That's what chart action's about. Uranium. I keep hearing uranium, and I like uranium. I really do. I think that the United States is exceptionally foolish not to be getting more aggressive in areas where it can be supported to put up this clean energy. We have the know-how now. This should be done. We don't need the mega plants. You can do region plants. It can work. And for these crazy mega AI buildings that consume electricity like there's no tomorrow, they're going to need an energy source where they don't drain from the local communities. You got to start thinking about reactors. That's my opinion on it. And it's sustainable energy. Higher high, lower low. You're fighting a battle right here for direction. Meta's come down hard. Why? Well, we know the reason. And this is what bothers me with Apple. I realize Apple came out and they did this phenomenal talk and they said, we're going to buy $110 billion of stock. We're increasing our dividend by a penny. And the sales in China, don't believe what you hear. They're actually better than was heard there. Okay. Now I heard today the Chinese government is friendly with Musk and they're saying they don't want to see workers drive a Tesla into state-owned parking lots where they own factories and so on. I was reading this today. I'm not quite buying what Tim Cook is saying there, but I do buy that he's got a phenomenal product, an older one that's going to tie into AI being the phone, and he can capitalize on that. But like Meta, I don't know how much they have to do on CapEx to get to where they're at. Don't know enough about it. When Zuckerberg said to you how much he had to spend and they've got to get it to a certain point, that's why this is down. The growth is there. It's the spending. So you're going to see this in a number of companies. And while you all think that AI is the magic for all corporations, let me tell you the reality. Gary Cohn said it today. He's the vice chair now of IBM, and you know him under the administrations. You know, he's a bright guy. And what did he say? He said, they're experimenting to see how it goes. You're at the beginning stages. It's not for everybody the way that they think. It will help in some manner all type of enterprise. But how much it helps and how important it becomes, everybody wears a different shoe size. That's what you got to play with. All right, that's the news of the day right there. Here's some of the other charts that I look at. So you put this all together, you try to come up with a game plan, and the one thing that I try to have you work with are ideas on learning chart formations. That's very important. I mean, all you need to do is turn on CNBC at the end of the day, and as much as they talk fundamentals, they're trying to show you Carter Worth and these other people what the charts look like, option strategy so you don't get hung out there, things like that. Well, one of the most important patterns, and you see it all the time, is an outside day or an outside week. It's either a continuation or the end of a chart pattern move. It's one of the two. And it generally is ahead of the market. 9 video chapters, PowerPoints, real examples. Then, so that I know sure that you're learning what I'm doing, I invite you in, it's all included in the course, to my morning futures. So that's either the futures or you're going to be able to get the SPDR-ETF or both. The charting software for the qualifying people. Qualifying means you haven't used it in the past year. Otherwise, you got to pay for it. But I can give it to you free if you haven't. And we have 2 versions of the charting software. Most of you haven't used both versions, so it generally works just fine for everybody, okay? And how do you get this? Well, it's simple. You go to our website, iraepstein.com. And it's under the word, what am I doing? I'm giving you education. Go to the word education. You can move your cursor to the top here, give it a click. I think you'll learn something. I'm Ira. You have a good weekend. I'll catch up with everybody Monday morning. Take care.